Testing 1 2. Testing 1 2 3. Testing 1 2.
It's my aim. I know the game you'll play. Terminate your liquidity. No sheeple will stay. I target sheeple liquidity. Terminate their mind. Zero win on every beat. Trading secrets I find. Hit by the cost way too high. Can't take more losses now. Till the months in like the tide, gotta cover somehow. My trading guru says baby size, baby size. Still got 40 minutes to ride. Baby size, baby size. Time to fake, can't be denied. Too late in the day now. Need to cover up soon. Market's moving anyhow. Gonna dance to its tune. Not enough to add more size. Don't wanna mess it more. Watching numbers hypnotize. Feel it in my core. My trading guru says baby size, baby size. Still got 40 minutes to ride. Baby size, baby size. Time to fake, can't be denied. Not enough to add more size. Don't wanna mess it more. Watching numbers hypnotize. Feel it in my core. I am a cyborg trader. Charts are all I see. Locked onto the market, just like a machine. Simple data feeds me straight into my brain. Hunting for liquidity, terminate the gain. I'm a cyborg, terminate psychological state, terminate. I'm a cyborg, find the pain, zero in, terminate, terminate. Stalking the numbers, zoning on the prey. Analyze behavior, and then I play. Longs and shorts in chaos, max pain. I know sharp patterns tell me when it's time to show. I'm a cyborg, terminate, psychological state, terminate. I'm a cyborg, find the pain, zero in, terminate, terminate. I'm a cyborg, terminate, psychological state, terminate. I'm a cyborg, find the pain, zero in, terminate, terminate. Stalking the numbers, zoning on the prey. Analyze behavior, and then I play. Longs and shorts and chaos, max pain. I know sharp patterns tell me when it's time to show. I'm a cyborg, terminate, terminate. Terminate. Discord chats, we got a spy. Feels like retest, sneaking like a cat.
COVID can't deny. 100 nights I've lost this fly. Blow them out, but I'm blind. Laptop fetching just in time. Study volumes like a map. Trading guru raising cap. He's the
Testing 1 2 test. Uh-oh. The timer's bugging out. I think about time to start this. Uh-oh. I guess that's it. All right. Okay. Figured I would do a portfolio review, just what I'm doing right now. I get a lot of questions, people DMing, asking what I'm doing, why am I selling, am I selling everything, do I think this is the top? So we're going to talk about that today. Let's see if we get some people in here. Let's see. Who do we have in here? Do we have... All right, all right, all right. Markets at all-time highs. Bitcoin ripping. Making all-time high after all-time high. And it was just only... like, not even... Or a little over a week ago. Everybody was calling for the end. The end of the markets. The top. The cycle top. Everything going to crash to zero. I mean... It's really simple, you know. The markets are really simple to understand, and just requires some logic to think about it, right? On a macro scale, what you have going on is the Fed cutting rates, right? They're starting to cut rates. We saw this. We saw the first cut back last year, 2024, near the end of the year. That was the first cut. And the markets have been pretty much up only since, right? And then we had the recent cut, you know. Has it been like a few weeks, right? Or a month? Oh my God. Has it been a month already? But with 2 more scheduled to happen this year, by the end of the year, right? We're in October, so we're going to get a couple more cuts. Well, that's in the plans, right? You know, anything can change. That's the thing with the markets. But right now, the markets are pricing in 2 more rate cuts. And what does that do? You know, what does that do? I mean, to put it simply, it just allows more liquidity to flow into the markets. People looking for more risk to put on. You can borrow a little bit cheaper, right? Not cheap as we were back in the last cycle in 2021, but it's allowing people to borrow more capital and to put on more risk. And the yields, even though the yields have been kind of stable, they're starting to go lower, right? And as they go lower, you're not going to get the 5%. You're not going to get the 5% in risk-free assets in perpetuity, right? Those yields come down to 4%, 3%. People are going to start looking to put on more risk. That's simply how it goes, right? I mean, they're looking at inflation easily over 10%, you know, the real inflation. So people will they'll look at their returns. They're like, well, if I'm only earning 4% or 3%, it's time to put some of this money to work. That's it. That's as simple as it gets, right? So you got a lot of people in social media, on X, especially people with a lot of followers, and they get a little bit too sophisticated with their analysis. They get a little complicated with it and go a little too deep, and eventually they get that analysis paralysis, trying to figure out where the markets are going, trying to time the market. But then they put out some, you know, they start leaning on cycles and the Bitcoin cycle, but Bitcoin cycles, they were based on the environment at the time, the macro environment, low rates, free flowing liquidity. This is the first time since Bitcoin has launched, you know, almost 2 decades ago, well, a decade and a half, right? That you've had an environment where you had a restriction on rates, right? Higher rates, or sorry, you just had a higher rate environments, and this is the first cycle that we've participated in with Bitcoin, that has seen that, right? So people trying to predict it and thinking what's going to happen, that's why trying to predict markets in general is a waste of brain power, honestly. You're sitting there, what the market is just people with opinions, people with different opinions coming together in one place, the markets, and placing their bets on where price is going to go. That's all it is. And they place their bets by either taking liquidity or giving liquidity. And they're like, there you go. That's my bet on the market. That's all it is. And if you get more people taking liquidity, betting the market's going to go higher, then the market goes higher, right? The prices go higher. Demand is there. That's it. So trying to predict human behavior, human emotion, it's really a waste of time. You could use that brain power elsewhere. Whatever you want. So we're looking at the markets today. And what have I been doing in these markets? Well, if you follow my Twitter, I post on there regularly. Well, every once in a while. And, I post my thoughts on what the market is doing and what I'm doing. But what am I doing here? And what have I been doing? For the past, let's say since, when did we, I think it was like August when we hit that high, right? July, August, there we go. Since August, I have not bought anything. I've been providing liquidity with concentrated liquidity pools, generating yields, and selling. I have been selling. Not a lot. I was very heavy in Ethereum. And especially when we were down here at 1500. I even levered up, used leverage. I was overexposed. I was uncomfortably long Ethereum. Horribly long down here. When everybody was calling for zero, when everyone was talking about Ethereum going to zero and that's the end of Ethereum and Ethereum is shit, I was buying more. I kept buying and buying. I was like, people are talking about this and saying this, but where's their proof? I see nothing changed with Ethereum. It's just cheaper in price. That's all I see. But you know what? The number one thing that could change an investor's mindset on any asset is price. Doesn't matter the fundamentals, whatever, moon phases, whatever, it doesn't matter. What do you think of the asset? But once that price, either if it goes way down or way up, it has the best influence on an investor's mindset. Now everybody's loving Ethereum. Where were they when I was buying down here? Oh man, it was ugly. And I questioned myself a few times. It's tough. It doesn't get easy buying the dips. But you sit there and I'm like, oh my God, what am I doing? Am I throwing it in a fire? You have these thoughts. But you gotta put that emotion aside and inject some logic. Okay, what's happening here? What's going on? What are people saying? What is everyone thinking? Okay. Well, nothing's changed. Ethereum didn't change. It's the same it's the same asset, right? Just people don't like the price. That's it. People don't like the price that it's low, so they dump and sell. That's it. They get tired of it, then they go chase, they take their losses. They take their capital, the remaining capital, and then they go chase the next shiny object. And then that doesn't work out. Or maybe it does a little bit to give them a little hope. Then they take their capital, their liquidity, go into another asset. And they rinse and repeat until they're out of money. Because they're constantly chasing that shiny object. Right now, Ethereum is that shiny object. I see a lot of people saying, hey, is it too late to get in? Should I get in? It's like, bro, get in now? As as an initial entry, down here, they were ghosts. They were nowhere to be found. And that's how most people think. That's how 90% of investors think. But you know what? It's needed. You know, if everybody thought to buy down here, the price would never go down here. If you think about it, nobody would be selling. People would be buying, right? So there'd be so much demand, prices would just go higher and higher, right? They would just infinitely go up. So we need the majority to think this way. As counterintuitive as it sounds, right? Like, as you know, I'm always talking about managing risk, making sure you're not buying the tops, but in reality, we need those people. We need them more than they need us. Because the prices will not hold up here if everyone thought this way. Prices would probably stay flat. Ethereum would become a stable coin. But that's not the reality of things, right? That ain't the reality. People tend to think with emotions. They knee-jerk reactions. Price is up. Oh my God. Where was I? Dang. I wish I would have bought down here. And then they always say, oh, if price can come back down to 3K, I'm going to load up. I'm going to load up. Talking out of their ass, man. Because if it goes down there, they're going to be ghost. They're like, oh, it's over. They disappear. Or even worse, they buy up here at near 5K. And then they capitulate down here. They're like, oh, I broke 3K. It's over. Boom, capitulate. And that's where I'll be buying. So it's all a game. And the markets are designed in this manner. The markets are a fundraising vehicle to generate donations. And they don't even have to promote it. They just depend on people that think like the 90%, that FOMO in and get scared at the bottom and dump at the bottoms, buy in the tops, rinse, repeat, right? So that's what we depend on. All right, so the markets here are at all-time highs. The crypto markets. Oh, also the stock market too, right? We're going to talk a little bit about that as well. So what am I thinking here? What am I doing? Well, like I just said earlier, I've been selling, right? I've been selling, but I still have exposure, right? I'm just lightening up my bags. I was buying Bitcoin under 80K. Now I'm just distributing. Bought Ethereum all the way down to 1400. Just distributing getting some profits, paying myself for taking on the other side of that trade. Now I'm not buying up here. Not buying anything up here. I mean, look at this move. And this certainly can keep going higher. Like I said, I'm not here to predict. Nobody can predict anything. So we got to get that out of our heads. Where is it going to go? Where should we sell? What price are you going to sell? Even if I'm like, oh, I think it's going to go to 150. Even if it hits 150, I will sit there and analyze and just watch how the market's reacting and acting in that manner when it gets there. And determine, looks like it might go higher. Looks like it might go lower. But how I determine when I buy or sell is more so, what is my risk up there? Well, I've been holding a lot of the Bitcoin I bought below 80K at 150. I'll look at it like, if we could just get green candles all the way to 150, I'm going to take more profit, because the risk of holding that and not paying myself a reward for holding all the way up there is higher than any potential reward beyond that, just in the short time frame, right? But then on the flip side, I also got to think there's also risk to the upside, risk of missing further opportunity. If we hit 150, what if we go higher? What if we go to 200, 250, 300? You gotta resolve that as well. You got to resolve and mitigate that risk as well. It's risk on both sides. Risk to the downside, risk of loss, risk of missing opportunity to the upside. Otherwise, why the hell are you in the markets if you're not participating on the upside? So you gotta balance that and say, okay, I probably should take some profit at 150 if we go straight up there in the next few days. Okay, I'll take some profit, but I gotta leave enough on to continue the ride and then have enough on not only to continue the ride up, but if we do draw back and have a pullback, if we pull back to 100K, yeah, it would suck, but I wouldn't be distraught over it or upset that I didn't take profits. And you see that's the balance. That's all. That's like, to keep it simple, to keep your investing super simple. That's the best approach. What's my risk to the downside? And what's my risk to the upside? If you're not exposed enough where you're like, well, if we keep going, I'm not going to have anything, or I'm not going to have enough, then you got to fix that. Got to buy some, buy a little bit, buy enough to where if we do draw back and pull back, you're still okay. Yeah, it would suck, but you're okay, right? And then you could buy more at lower prices wherever you think the market's going to go, or wherever you want to buy, right? That's all according to your plan. That's another thing. Don't blindly follow what other people are doing. Don't sit there and try to don't sit there and blindly follow people, because say for instance me, like I'm like, oh yeah, I think we're going higher. And you sit there and you're like, okay, I'm gonna follow Float Locker. He thinks we're going higher, so I'm gonna follow that plan too. Well, the difference is that I have conviction in that plan, and I'm willing to see the market higher. So if we go higher, then it's great. You're happy, I'm happy, we're all happy, right? You're like, oh yeah, he's the best, it's great, he's making me money. But if we draw down and I'm okay with that, but you're not, or you're overexposed, or you're not properly positioned, and you have too much on, then you're like, oh, screw this guy, he doesn't know what he's talking about. You see, that's how it works. You don't have conviction in that plan, and then the pain gets so great that eventually you sell everything. You sell everything, and that's usually where the bottom is. Whereas I have a plan to buy more at specific prices, right? And then the market could rip back up higher. You sold at the bottom. I'm sitting there like, all right, plan's working great. And you're like, oh, it didn't work great. We drew down. Well, that's because it wasn't your plan. You didn't have conviction in it. And you just didn't understand what I was thinking as far as my investing strategy, right? So that's why it's very important. Do not follow other people's trades. Do not follow other people's plans, because they have a different level of conviction in it. You could take two investors. They could be invested in the same asset. One could be long and one could be short, and they both could be right in due time, right? Say you get a rip up higher, the long exposed investor is doing great. They could take profit, and then the market draws back. Then the shorts start getting into profit, right? To keep it simple, they're both right, and as long as it went according to their plan, then they both win, right? So you can't sit there and say, oh, should I go long or short? Should I pick up or down? Because you could be right in both directions. It all depends on timing. And that's another thing. Don't time the market either. Don't try to time it. It's very difficult. Very difficult, because eventually you're going to get priced out. You'll get priced out of the market. If you try to time it by going all in and all out, right? Thinking you're smarter than the market. You know, what was it? Just a little over a week ago, everybody was calling this for going lower, right? I even thought we may go lower. I was thinking if we don't hold here, we could go to 90K, 100K, 90K. And that didn't happen. Look at that. Look how quickly the direction changed on a dime. That's insane, right? You can't predict that. So if you sold here and you're like, okay, I think lower prices, and you went all out, now you're priced out of the market. Are you going to buy up here, buy back? You're like, hell no. You're going to wait for a pullback. And then what if this thing goes to 150 and then pulls back to 130, 130K, but you sold at 110? Now you're still priced out of the market. Now you're upset. And then it rips back higher. It starts getting closer to 200K. And you're like, you know what? Screw it. I'm getting in, but I'm also going to use leverage to take advantage of this. And then the real pullback comes and you get liquidated on leverage. Lose everything. Then your significant other or your friends and family, they're like, hey, crypto's doing amazing. You must be doing really well, huh? And you're just like, you're sitting there like, nope. So yeah. Don't, I'm telling you this because it helps you manage that emotion, the emotions. Always have some exposure. And then increase the exposure during times of high fear, right? And as long as you still have conviction in the asset, why not add more at lower prices? And then when things get a little euphoric and get crazy like now, take some off the table. And then keep that little core investment going. Always have some sort of exposure. That way, if this thing goes straight to 150 or even 200K, you're like, wow, I wish I had more, but I have enough. I have some. I'm in for the ride. So that's it. Controls that emotion. You don't FOMO in. You don't use leverage and get wrecked. So that's the idea. So what am I doing now, right? I said I've been selling. I've been using concentrated liquidity pools on my Ethereum USDC, selling out. I took some of my ETH. I have some BTC as well. I'm using the Coinbase BTC, farming some liquidity pools, generating yield. The idea with the Ethereum BTC is that I don't want to pair it with USDC because I don't want to buy more Ethereum up here. Let's go to Ethereum. I just don't want to buy more Ethereum up here. So I'm keeping the Ethereum I have and I paired it with BTC. So they can just go up in tandem and I still make profits on the way up. And if we go down in price, I'm okay because I have that. I'm not adding more liquidity or I'm not adding more capital to my position, right? I'm not buying more as price goes down. I still have the same amount of liquidity in there, just the value of it goes lower, right? Because if prices go lower, the value goes lower. But I'm not actually buying more. That makes sense. So I keep the same amount. I've already taken a lot of profits. So I don't want to buy more up here. It doesn't make sense. If I want to buy more up here, why the hell was I selling at 4,300, 4,400, 4,500? I even sold all the way up to 4,800. If I'm selling up there, why am I buying it back? It doesn't make sense. That's how you got to think about when using concentrated liquidity pools. Where do you want to buy and where do you want to sell? That will determine your ranges. Then how wide do you want to go? For instance, let's go to Metrix Finance here. Let's take a look. I like this tool, man. Because you know how I say, if you want to buy, if you know where you want to buy and you know where you want to sell, that could determine your ranges. But you also want to determine how tight you want to keep those liquidity pools. Right? You don't want to be too aggressive in the range because you buy too much too soon. You want to see exactly where you're buying, how much you're buying. Is it too aggressive? Is your range too wide? Right? And then you could fine tune it with this tool. It's very easy to do. Here, I like to use this one, the 0.3%, because it pays more. It pays more when volatility spikes. So you look in here and say you have 10 grand, right? 10 grand. And you're like, I want to buy more Ethereum, but I don't want to buy up here. I want to buy it lower. Okay. But you still want to generate some yield. And you have some Ethereum. And you want to sell it higher. Say you want to buy Ethereum down to 3K. And you want to sell the Ethereum you have up to 6,000. Right? Okay. Well, I wouldn't set the top at 6,000 because I'll show you why. And you don't want to set the bottom of the range at 3,000. If you're trying to buy down to 3,000, you're going to use up all your liquidity. Here, let's make this 10 grand. You're going to use up all your liquidity before you even get to 3,000. You're already going to buy it all up here. Right? A lot of it's going to get bought over here. So you want to widen out the range to reduce that frequency. So what I like to do, instead of 3,000, maybe put it, 2,500 or 2,000 even. See 2,000. And then on the upside, you don't want to do 6,000 because you're going to be all out of Ethereum by the time we get to like 5,500. You're already out. And it's like, well, look at the value. See, if I do total value, we get to 5,500. How much more can you make after we get to 5,500? Well, at 5,500, it's worth about $10,300. Your $10,000 worth of liquidity. At 6,000, it's 10,000. You earn an extra like $27 to go an extra over 10%, 11%. The market moves 11% to the upside in your favor, but you're only earning $27. Whereas the risk, if the market draws down from 5,500, you lose all the profit. So you want to go a little wider on the upside so you can enjoy the capital gains. That is the primary prize. See? Keep it wide. You get to 6K. There you go, 10,600. Earn an extra $400, $500, or $300, $400, whatever. Plus the yield. Don't worry about the yield. Like this number is arbitrary, and it changes on a second per second basis, minute by minute. It depends when people are active in the markets. If you have no customers, it's going to be low. But during times of high volatility, high volume, a big spike in transactions, this number will 10x easily, 20x. And then that's when you really roll in the yields. All right, so with that out of the way, what should you do in this market? What am I doing? Well, let's look at Bitcoin. Let's do a quick. Let's look at the markets here. I want to look at the charts, see what I'm thinking. I like to look at the Bitcoin dominance. Go on the weekly here with the dominance. I have this channel drawn. We broke down below this channel. But doesn't mean it's alt season, right? Look how far we came and how long this Bitcoin dominance has been going down for. It's been going down since June. July, August, September, October. 4 months, almost 5 months now. And it's starting to bottom out here. This is the weekly chart, bottoming out. Now, will this get rejected here or at 60%? That's what I'm watching. And then roll back over. Then you could make an argument for alt season if that happens. Or does the same thing happen as it did last year? Late last year. Everyone thought alt season was coming down here. Everyone was calling for it. Nope. Ripped. Bitcoin the king is still in the driver's seat. And I say it's still in the driver's seat today. But we're starting to see a shift. It's not, even though Bitcoin's making all-time highs, a lot of the altcoins are following as well, which is a good sign for alt season. But I'm not putting my bet on it yet. I want to see a rejection here and then dominance rolling back over. Then maybe we get an Ethereum outperformance, and then Solana joins. Right now, Solana is kind of like in its funk. We look at Solana. I call it the ETF curse. Bitcoin went through it. Ethereum went through it for over a year, just chopping sideways. Now Solana's kind of going through it, right? Look, since March 2024, price has been pretty much sideways. Solana has been great for farming concentrate liquidity. I've generated so many yields on this asset alone. I wish I put in more, but it is what it is. But I made a nice bag off of it. And even though price is sideways, I've more than doubled my portfolio, my Solana portfolio. Simply using concentrated liquidity. Buying the dips, selling the rips, right? Capital gains on top of the yield. Oh, it's been beautiful. It's been a beautiful trader, especially using liquidity pools. Couldn't beat it. Best performer. The lows don't get too low. Yeah, we got a little scared down here when we broke below 100, but I was still buying. I was like, a little scary, but it's okay. Nothing changed with the asset. Just people got a little scared. Everyone got euphoric up here when the Trump meme coin launched. Was that January? Yeah, right there. When we hit that all-time high right there. So, Solana, once it gets out of its funk, once it gets out of that curse, that whoever is accumulating Solana, trying to get lower prices, then you should see a run. And this cycle is a little different. It may rhyme, but it's a little different because now we have, instead of the top two, instead of just Bitcoin and Ethereum, we now have Bitcoin, Ethereum, and Solana. So you have it may even extend the cycle in a way. If you think about it, initially it was just Bitcoin, right? In its early days, all Bitcoin, running, and then it gets exhausted. You get the big dumps, right? That was the end of the cycle. And then Ethereum came into the picture. They could pass the baton to one another, right? And for those that have been around for a while, remember Ethereum and Bitcoin, right? They would run in tandem, or one would run and then the other one would run, and then they would flip, and then you get alt season, and then the end of the world, or the end of the cycle, right? Not the end of the world, end of the cycle. It feels like the end of the world. Now you have Bitcoin, Ethereum, and Solana passing the baton to one another. This gives more time, more rest time to the other two assets, right? Or if two assets run, it gives one at least time to rest. Not only that, we have institutions buying. You have the ETFs. And honestly, a lot of retail isn't participating this time, or at the moment. They're not participating. A lot of them got wrecked 2022 during the FTX crash, Voyager, Luna, all that, right? It was the Armageddon of crypto, right? Everyone got wrecked on that. So a lot of them aren't, they're just watching from the sidelines. But you got institutions accumulating now. Now you have the ETFs. What happens after the Solana ETF is you got Bitcoin ETF, you got Ethereum ETF, and then you got Solana. What happens after that? I have a really good hunch that it'd be altcoin ETFs or baskets of altcoin ETFs. That's where they're going to package up the shit and then sell it. They're going to sell it to people with a lot of money that are looking to take on risk. They're like, oh, I could just go on my E-Trade, on my Charles Schwab, on my on my Webull account, on my Robinhood account, and I could just buy crypto using the ETFs. Oh, perfect. There you go. That's the next onboarding of retail. That's how they'll sell it, using the ETFs. You could see this playing out in real time if you think about it. If you just zoom out and take a look and see what's going on, right? It was Michael Saylor buying Bitcoin. Now it's Tom Lee, Ethereum. What's next? Solana's about to come around. There's gonna be a talking head. There's gonna be the main character that's gonna be buying Solana and promoting it, right? Because right now they're just buying. They're not gonna promote it right now. Why do they want the price to go up? They're accumulating. But eventually it's gonna come out. There's already Solana treasuries starting to launch. Once they're ready, they're going to promote it. They're going to be on CNBC. They're going to be promoting it, to the masses. People are going to start talking about it. And then you see how it goes? Then it trickles down. What's the next ETF? Oh crap, I missed Solana. I missed Ethereum. I missed Bitcoin. And look at what they did. They did amazing. But people forget what happened during the times when they just launched the ETF. All the chop, the volatility. Everyone thought it was going to zero. People forget it. People forget very easily and very quickly. So then they go back to thinking with emotions, right? 90% of people are like, okay, I missed Bitcoin, I missed Ethereum, I missed Solana, I missed all the ETFs. What's next? I need to make it on the next one. That's 3 in a row. They all did well. What's next? They feel like everyone's already thinking Bitcoin's too high in price. So a lot of people not exposed to crypto, they're not buying Bitcoin. They were saying Bitcoin was expensive at 10K. And then they said it was expensive at 60K. Now it's almost 130K. And people are calling it expensive, right? So they're looking for that next play to make it all, to catch up. Then they're gonna be FOMOing these shitcoin ETF plays, baskets of all coins in ETFs, and it all coincides with the Fed cutting rates, more liquidity, easier borrowing, lower rates, more risk appetite. If you think this is all coincidence, it's not. If you think about it, in life, there's always someone selling something. Where you decide to buy is how you control it, right? If you like it and you really think about it and you're not acting on emotion, you're just thinking logically, you can benefit from it. But most people don't think that way. They knee-jerk reactions. They want to just jump in on the next hot play, shiny object syndrome. They want to get rich tomorrow. It's even worse today than it ever has been. People can't hold long-term investments for not even a month, right? Maybe they're like, oh yeah, I'm going to hold this long-term. They get a little profit and then they're just itching to sell. They're like, oh, this is not enough. I need more. And now they're trading 0 DTE options. Gambling. It's pretty much gambling. You got this gamble culture mindset throughout the markets. Robinhood's even, they're gamifying investing. So it just further promotes it. And people, a lot of people think this is the way to invest. It's terrible. Most people don't even have long-term investment accounts. They just have their trading account that's destroyed with options. They have the crypto accounts full of shit coins. They don't even have Bitcoin or Ethereum, or maybe not even Solana. Maybe enough to run some gas, to have some gas, but that's about it. So it's very important to develop a mindset of owning assets long term. Then you control your exposure throughout, right? When things get a little euphoric, like shit is right now, and where's that Bitcoin chart? Things getting a little euphoric, you know? Maybe take some off the table, but keep some on. And that's it. It's not, nowhere in here am I doing Fibonacci retracements, trend lines, all that shit doesn't matter, man. It doesn't matter at all. So, if you're the guy or the girl sitting here and you're like, okay, all right, Flow Locker, I get what you're saying, but what do I do here? I have no exposure. I'm foaming with FOMO at the mouth. I'm trying to control every fiber in my body to not FOMO in. I don't want to buy the top. I'm scared, but I'm also scared that we're going to go higher. What do I do? Use this tool. I like to call using a liquidity pool as a FOMO eliminator. And all you do, say you have 10K. You're like, I got 10K burning a hole in my pocket. I need to get in something. And you just know for a fact that if we go higher, you're going to end up FOMOing in. You're like, I want to control that. I want to eliminate and mitigate that risk. That risk of that knee-jerk reaction and just like, you know what? Screw it. Buy it all. Leverage, right? You want to avoid that moment because it's very real. So you're sitting there like, I got 10K and I've been sitting with this 10K for the past 30% upside in Bitcoin. I've been waiting for us to get back to 100K and it's not getting there. What do I do? Well, just like I explained earlier, figure out how much exposure you want in the asset right now to where if we do draw down back to 100K, you're okay with it. I mean, yes, it'll sting a little bit. You want it to sting a little bit because on the upside, you're enjoying that move, right? Just enough. Say you take 20% of it, of your stables and buy Bitcoin right here. Don't even think about it. And if you're okay with a 30% drawdown from here on 20% of your position, you're all good, right? But remember, you want to have like some little bit of pain. Like it's like, okay, if we draw down, if you're sitting there like, oh yeah, perfect. It's like I will have no feelings if we draw down and you're okay, and then you're way underexposed. You want to have enough to mitigate that upside, to mitigate that FOMO. See, look, Pepe's watching, man. He's waiting for you. He's waiting for you to FOMO in. You're gonna take your bag. So and then on the downside, you set up that range. Like I said, use this tool here, position breakdown on Metrix Finance. As it goes down, you want to see, okay, am I buying too aggressively? If I am, make the range a little wider. Never set up your ranges based on APR. Ever. It's a sure way to get wrecked. Because you're going to be like, oh, it's too 11%. Screw that. Here. I need it tighter, man. I need it tighter. Let's go 30. Let's go 4,000. That should really boost up those yields, right? That should boost them up. And we'll go 5,000 on the top end. We're just using Ethereum here because I already have it up. Oh, okay. Now we 5x'd the yields. Great. But then what happens? What happens when we draw down? Oh, at 4,000, all of your 10K is bought up into Ethereum. You have a full bag of Ethereum. And then what about the upside? Oh, you're already out at 5K. You're out of the market. You're back all into stablecoins. And then you're sitting there like, man, the market's going higher. And then you FOMO in at 6K. Mitigate that risk. Don't worry about the APRs. Plus, this extra 40% in APR, that takes 1 year to realize. That's an annual percentage rate. APR. A year in crypto is a long time. A year in one position is nearly impossible with liquidity pools because things change constantly and it moves fast. You're going to be in a new liquidity pool before you know it. Maybe you could be in for a couple months in a wide range, but you're going to have a different analysis, a different view on the market at that time. And you're like, okay, great. I have a wide range. The market's at, say, Ethereum's at 6K. And you're like, great, awesome. I took part in all that. I got all my capital gains. Now I want to adjust. I want to maybe get defensive. Set up a liquidity pool, 100% USDC to look to buy the dip. Whatever it is, you're going to have a different plan at that time or a different view on the market at the time because you have more information. You don't know what's going to happen then. What you're trying to do is mitigate that FOMO risk and then mitigate the drawdown risk. That's the FOMO eliminator strategy. So then as your plan plays out, as the market, let's just go to Ethereum since I got it up over there. Say as the market just chops around in your range, you're like, it's going down, okay, whatever. Going up, whatever. And then you get big spikes of volatility, high volume, yields 10x for a couple days or maybe a day here and there. And all that time while you're waiting for your plan to play out, you're earning some yield. You're getting paid some yield while you wait. What if it takes a year to play out? Perfect. That's fine. I make an extra, on average, I'm earning 600 to 700% APR. Sounds pretty phenomenal, right? But that's what happens when you just stay in the market. You don't have to worry about, like, look at this. Like I pulled this up. Where is it? This one here, right? Let's see. Where is it? Oh no, this is a different, sorry, that's a different wallet. Looking at other wallets. Do I have it up here? Nope. No, I don't have my wallet up here. It's looking at different wallets. But as the market trades and consolidates, you're going to earn those yields. And there'll be times where they just get boosted. Sometimes you'll see 2,000, 3,000% APRs on super wide ranges, right? I had a range where it was 2,000 Ethereum to 12,000. Oh, hey Doozy, what's up, man? J.E.B.B tracker's now working. Yeah, I don't know if you're in my Discord. The guy that I was working with, a friend of mine, he passed away. So I don't know if his wife's gonna renew it. She said she's gonna learn the code and she knows some of his code and try to maintain it. But I don't want to push her to say, hey, your site's down. I mean, I mentioned it to her, but I mentioned it to her through J.E.B.'s account. I don't know if she sees it, so I don't know. But yeah, he passed away unexpectedly. So I don't know what the future is for J.E.B.B. So we'll see. I'm gonna try and stay in contact with her if she's able to get it back up and running. Yeah, man. If she can get it up and running, great. That'd be great news. If not, there's nothing. I'll see if maybe she'll hand it over to me and maybe I can maintain it. But I'm trying to. This just happened recently, like a couple months ago. He passed away, and then so it's I don't want to but we'll see. Yeah, we'll see if I can get it or maybe take control of it and get it back up and running. But yeah, it's unfortunate, man. Sucks. Yeah. But in the meantime, use Metrix Finance. Metrix Finance is good. I like it. The reason why I like the J.E.B.B tracker is because you could get an overall, even Metrix does it as well, where you can get like an overall like portfolio look at at your at any wallet, right? Or you can combine multiple wallets and get it. So it does it for the most part. So this is good. The Metrix finance is really good. Just the thing is it's pricey, man. It's like the J.E.B.B tracker was more of an affordable way to have it, right? But yeah, so we'll see. If I can get it, I'll get it back up and running, and we'll go from there. But yeah, that's unfortunate. But yeah, like if just kind of going back to what I'm saying, if you're underexposed, keep it simple. Buy some here. And yes, we're hitting all-time highs, and you feel like you're gonna buy the top, and you don't want to look like a sucker. But that's what I'm saying. Have enough to where you mitigate that FOMO risk, but don't have too much to where if we draw down, yeah, it'll sting a little bit, but you're not out of the game. And you're not freaking out. That's the idea. And over time, you'll see how this works. Stick with it. Stay in it. Stay in the investments that you have conviction in. And if that changes, deal with it then. If that conviction changes, if you don't want to be in an asset or something changes with the asset, that happens too. Then that's your exit plan. Exit plan, if you need to exit and rethink it and see if you still have conviction in it, that's fine. But to just exit and enter based on emotions because price is going up or price is going down, sure way to lose. You'll lose in the long run with that. So no knee-jerk reactions. Let's see. I use it, but I have a lot of problems with some positions. Not accurate, especially with DeFi tuna. Oh, yeah. I don't know if Metrix supports DeFi tuna. It's a good question. I could ask Jake about that. Here, let's see. I'll message him right now. I have a direct line with him. Does Metrix support DeFi tuna? So I'll message him. I message him. I don't know if he's going to respond right now, but, we'll see. I've been hearing a lot about DeFi tuna. I'm very risk averse. I prefer just Uniswap, Quick Swap, like the major dexes. I don't like to insert middlemen. And I mean middlemen like extra smart contract risk. Right? I don't know, DeFi tuna could be, it looks good, looks like it's fine, but I like to sleep at night. I don't want to wake up to a hack or something crazy happening, So, I think I got a decent sized portfolio. So it's kind of like, I'm just doing what works for me. I use Uniswap. I keep it manual. I don't need the automations. It's nice to have, but it's not necessary. Especially me. Like I manage my positions once to twice per month, so it's like, whatever. Like I'll just do it myself. Not a big deal. There are times where I need the automation. Yeah. When markets are crazy and volatile. Yeah. And then I just use like Aperture Finance for that. But yeah, the markets are high. That's my advice. That's pretty much what I got to say, because I know a lot of people are looking at the markets. They can't believe that we're at all-time highs. Just last week or a week ago, it looked like death. Look at Ethereum. Ethereum broke this low here. Like lots of people got stopped out. Then rips right back up. That's what the market does. Instead, have the mindset of thinking, okay, all right, they're ripping this right through, down here. And if you're in a liquidity pool, you're enjoying this yield. And you're buying the dip. That's the idea. It's never easy though. I make it seem like it's easy, like the way I explain it. Technically it is easy. It's just our emotions that get in the way. Hey, BT Fly here. Hey, what's up, man? Is DeFi tuna an auto rebalancer? Yeah, I think it has like auto rebalance. It's for Solana, right? if I'm not mistaken, like Solana positions. It's like the aperture of Solana, pretty much. I think that's a good way to put it. Doozy wants to elaborate on that. But yeah, I don't use auto rebalancing much these days. It's not needed. I kind of got over the fact that, you know what, if I can't be here to manage it and be super active and run tight liquidity pools and day in, day out and squeeze out a little bit more yield, then it's fine, whatever. I'll deal with I'll deal with a little less yield. It's okay. You know, to get my time back. But yeah, it's definitely interesting times in the markets. You know, we have, you know, the stock market hitting all-time highs after all-time highs. Whereas down here during the April tariff crash, everyone was freaking out. Now we're up almost 50% from those lows. It's crazy. I didn't even think we would be up this high. But now we're like in this melt-up mode. Nobody's really selling. The Fed's cutting rates. It's like that perfect opportunity. You know, see, like this guy's watching back here. Pepe's watching, man. He's like, oh, yeah. And then eventually people are just going to... There's a lot of people sidelined. A lot of people didn't think this would happen, and they have no money in the markets. And eventually they're just going to like say, you know what, screw it. I'm getting in. And that's what happens, and they FOMO in. That FOMO never goes away, no matter how long you've been in the markets. And then that's usually the top. Usually the top, like, you know, then you get a drawdown. Probably come back down to 6K. You know, maybe we hit 7K, 7,500. Finally get that rip higher, that fast-moving price action where it's like everyone's just getting in. And it's like, oh, shit, that PNC moment, that post-nut clarity. People are looking around like, oh, shit, what did I do? Did I just buy the top? Everybody's in. Oh, fuck. There's no more bids. Nobody buying. Everyone's already in. Then the first person inches to the door. I'm out. There's some liquidity. Sell liquidity. Other people start seeing them. Following suit. You know, it's like sheep, man. It's sheep. It's it's the herd mentality. People start seeing other people doing things. People smarter than them. They're like, oh, I got to follow this guy. He's smart. He knows what he's doing. So I'm going to follow him. And then other people see that person as being the guy to follow. And like, then they all start following. And then the people out of the loop, which is retail, is like, oh, shit. Everyone's leaving. Oh, fuck. Oh, shit. Oh, no. My portfolio's getting destroyed. I fucking held the bag. And that's it. Yeah, that post-nut clarity, man. The PNC. That's what I call it. They just see red. And they're like, oh my God, the market just doesn't pull back. I can't get my dip. You know, they've been calling, like, when the market was here at 5,700, oh, we'll get a dip and then I'll get in. But look, it has not had a dip. That's why this is a perfect example of a FOMO eliminator strategy, because the same thing could happen to Bitcoin. The same thing could happen to Ethereum. The same thing could happen to Solana. The same thing can happen to any asset. This is what you want to avoid. Because why are you in the markets if you're not participating in this? A lot of people are in that position right now. In the stock market. They see this like, oh my God. Now people are chasing. People are using leverage. People are trading small caps. You see the small caps running lately. And that is the mentality. It's like, oh fuck, I gotta be in this party. So they chase, and I would not, I wouldn't suggest going all in right now, especially if you have not been in the markets, because any moment this thing could pull back. But have some exposure, right? Don't go all in, but have some exposure. I'd say even here, if you're looking at the market here and you have no exposure, what are you doing? Like, yes, if you get in now, maybe get in with 10% of your portfolio, or with your cash position. Have some exposure that will not have you thinking about the market all the time, like, oh my God, I'm just missing this. You want to get that out of your head. You want to remove that noise. That way you can think logically. Okay, what's the next step? Great, I'm already in. Good. Yeah, it's not as big of a position as I want, but I'm in. I have some money working for me. Great. Now you can work on your plan and where you want to buy more. That's it. It's a process of elimination. Get it down to a simple plan. Okay, this is where I'm buying, this is where I'm selling. Okay, great. I have some exposure. That's it. No need to make it complicated. And then you could go on with your life. Ride the market up higher and higher. Then you see big fear like here in April and you're like, great, finally I got some money, extra money on the side. Time to put it in, put it to work. All right, things getting euphoric. Great. Let me pay myself, reward myself. Still stay exposed. You don't sell it all. And then wait for the next dip. Or if it keeps going higher and higher, as it goes higher and higher, you're like, okay, let me take a little bit more off. Take a little bit more off. And then you're like, okay, I'm down to my core position. I don't want to get below this exposure. Even though it feels like we're super elevated, this could drop back down. Yeah, it could. But in the meantime, you want to eliminate that FOMO. Yeah, a lot of things running out there. A lot of people sidelined. So control it, eliminate the FOMO, keep it simple. It's that simple. Stay away from leverage. Especially right now, I would not use leverage at all. I'm not leveraged at all. I was leveraged down here. Back in June, I was levered up. That's the time to be leveraged. When things are looking absolutely abysmal, everyone's freaking out, calling for zero. It's like, okay, let's start sizing up. And you use all your cash, and you're like, okay, let's start using a little leverage. Let's use some leverage. Let's get some more exposure. And then you get paid. Rinse, repeat. That's how it works. All right, guys. Let's see. I think I'll end it right there. I'm going to try. Man, like I always say I'm going to try to do more of these, but we'll see. I'll try to do more, man. I'll try to do maybe once a month. It's kind of like a portfolio overview, what I'm doing, what I'm thinking. But right now, to keep it simple, to summarize, what am I doing? I'm not buying anything. I've been selling. I'm simply selling because I was overexposed at the lows. I had such a big long position. I've been trimming. That's it, man. Like, I'm just taking profits. I'm harvesting. This is harvest season. You should have already been in, right? And don't feel bad if you're not. Just know there's going to be another opportunity, another like crash, another big dip, another scary dip. When you have that fear just in your mind and wanting you to sell everything, say, you know what? Put that aside. What's the logical action to do here? Prices are lower on assets that I like. Nothing's changed with it. I still have conviction in it. Okay. Maybe buy a little bit. Have your plan of where to buy. Don't get overexposed, unless you have super high conviction, that's up to you, because that's where you need to make the big bets. You can profit off of it, right? But yeah, I've been selling. I'm not buying right now. I'm just riding what I have. And I'm about 50% cash right now in my crypto portfolio, about 50%. And I put it in some stable coin. I stake it on like Euler, Camino Finance. They're paying pretty well, like 10 to 15% APRs on your stables while you wait. I'm fine with that. I'm chilling. I don't have to put on much risk, and just wait until the time is right to deploy it back into the market. And I still have exposure to Ethereum and Bitcoin and Solana. I still have exposure to them. Just not as much, but it's okay. I'm fine with that. Even if we go to 10,000 Ethereum, yeah, I'll be like, oh man, but it is what it is. I'm protecting my downside risk. I took on a lot of risk at the lows, just paying myself. I planted the seed at the right time when everyone is scared. Now I'm harvesting the crop while everybody's rushing to plant their seeds. It's harvest season, man. Why are you planting right now? You should have already been planted. But it's okay. It's going to be another season. All in cycles. It's going to come again. This is not your last chance, okay? You got plenty of time. So I want to leave you guys with that message. Hopefully you enjoyed it. Hopefully it was helpful. Control that FOMO. Use the FOMO Eliminator LP strategy that I laid out. And you won't have to think about it. All right, guys. Peace out. Take care.